Hi, I'm Amy Burton. I'm a senior manager at Azets Accountants in Perth. I've been with Azets now for about 10 years and I work in the agri team in general practice, so mostly working on accounts and tax work. So Azets are a mostly UK-wide accountancy firm for all businesses, small, medium, large. So the main things we're going to look at in this video are the changes to employers' national insurance rates and thresholds. We'll touch a bit on the Scottish income tax thresholds, and then we'll just finish up looking at the changes in double cab pickups. So employment taxes, you'll hear these referred to as PAYE and national insurance. So PAYE is the tax that you pay on your employment income, and national insurance is another UK tax which contributes towards certain state benefits such as your state pension. All employers will pay employers' national insurance on their employees' income. At the moment, employers will pay national insurance at a rate of 13.8%, and they start paying this national insurance on anything their employees earn over £9,100 per year. So that's what it currently stands at. And they also get what's called an employer's allowance, which is currently £5,000 per year. So for all of your employees, you'll get this £5,000 allowance, and you won't pay employers' national insurance unless your total bill is over the £5,000 per year. What is coming into effect from April 25 is that the rates are going to increase from 13.8% to 15%, and the threshold that you start paying the national insurance is actually going to reduce from 9,100 to 5,000. So the two of those things together are a negative impact, as you would think, because of the increased rate, and then they've also reduced the threshold where you start paying it. But if you then look at the employment allowance line underneath that, it's increasing from 5,000 to 10,500 per annum. So you actually get more of an allowance before you have to start paying those national insurance contributions. If we look at the impact of these national insurance contribution changes on a per worker basis, I've got a slide here, and no matter what the salary an employee is getting paid, the drop in the threshold that you pay national insurance is going to mean an extra £615 is due per employee. On top of that, you've got the additional 1.2% due because of the rate increase, which for an employee on a £20,000 salary, that's an additional £131. So that would be a total combined increase of £746, which you'll see is a percentage increase of 49.6%. The rest of this slide just looks at this on a salary basis. So if an employee is on 30,000, 40,000 or anything above that, you'll see the percentage changes there. But yeah, I guess the important thing is that you will be paying the additional 615 no matter what their salary is, and then the additional change because of the rate is slightly different. So as you can see from that slide, these changes are going to have a significant impact on employers in the agri and farming community. What I would say is, though, remember that because the employment allowance itself is increasing, I think the majority of sort of small farming businesses might actually be covered by that employment allowance, and therefore, although the national insurance is increasing, you'll, in most cases, or in a lot of cases, you would probably be covered by that employment allowance anyway. So hopefully the impact wouldn't be as big as you think. If we look at the impact of these changes across the workforce, so if we have a quick look at this slide here, mainly focusing on the top line. So if you've got a business, a larger enterprise where you're employing maybe 10 people and the average salary for those is 30,000, so your total wage bill would be 300,000. Currently, with the employer national insurance rates and thresholds as they are, the amount you'd be paying would be 23,842. And then with the increases from April 25, you'd be paying 27,000. So that would be an increase of 3,158, which is quantifies as 13.25%. So that's just to give you an idea across the workforce how that would affect a business of that size. So another announcement that was made in the budget was to the national minimum wage, which for these purposes, I'm just going to focus on the top line of this next slide. Because for agriculture in Scotland, there's just the sort of one rate of wages unless you're an apprentice, and that is this rate, which is currently £11.44 per hour, which is shown on this slide on the top row of age category at 21 years and above. So at the minute the rate is £11.44 and from April 25 they're going to increase that to £12.21, which is a percentage increase of 6.7%. And if we look at this as an employee workforce example, and we're looking at employees that work an average 35-hour week, then that would be an additional £1,405 that you would be paying because of the increase in the national minimum wage. If we then take into account the increase in the employer's allowance rates and thresholds, the total increase that you'd be looking at would be £2,372, so a total increase of 10.54%. While these changes for a smaller employer might not be hugely significant, when we look at the larger employers that have a larger workforce, it might be worthwhile just doing an exercise, sitting down, working out what your total wages bill is at the minute, including your PAYE and national insurance, and then just doing an on-paper exercise to work out if I pay my employees the same amount next year based on these new rates and the new minimum wage and the national insurance rate increases, what is my wage bill going to be for next year? Just to give yourself an idea of what that will look like. Finally, I just wanted to touch on another change that was announced in the budget, which was to double cab pickups. At the minute, double cab pickups are taxed as, or can be taxed as vans for benefit in kind purposes. What's been proposed from April 25 is that this will change and they'll actually be taxed as cars. So I've got a slide here for you which will hopefully sort of show the overall impact of that. So if we look at the bottom, the blue section, which is highlighted, the P11D benefit, and these are looking at figures based on a Nissan Navara, just as an example, with a list price of 32,000 and CO2 emissions of 169. For the P11D benefit, currently, if you buy a pickup for your employee, then this will get taxed as a benefit in kind on them. This will be at a rate of 3,960 for the vehicle itself, and then there'll also be a fuel benefit in kind of 757. If we look at this, what the effect of that's going to be from April 25, because it's getting changed to being taxed as a car, it's actually going to increase substantially, and the vehicle benefit in kind is going to increase to 11,840 and the fuel benefit to 10,434. So if we look at this in terms of how it affects the employee and the tax that they pay and the national insurance that the employer pays, you'll see that there's an additional, it's almost £7,000. You'll see the 3,152 for the vehicle benefit in kind and 3,871 for the fuel benefit in kind. So that is the additional tax that they're going to pay on that benefit. And then if we look at the national insurance, because it's going to increase to 15%, then the employer is going to be paying national insurance of almost sort of £2,500. So for some businesses, this is going to be quite a significant change for the ones that provide pickups to a lot of their employees. So it probably is worth sitting down, having a look at this, and deciding what you're going to do in the future. There are transitional rules which apply. So if you've, because some employers might have put orders on pickups now, which may not arrive until after April 25. So it's just worth sitting down, looking at the contract that was in place, because it's on a contract by contract basis, how this is considered for tax purposes. But generally, if you've ordered it prior to the 5th of April, then you should be okay. As much as I'm, talking about the figures as if it's all quite straightforward and easy to understand, I appreciate it's not. There's a lot to look through. There's a lot of information. So when you come to do this exercise, and just speak to your accountant. We'll have the figures anyway in most cases, and can probably look at them and prepare a spreadsheet for you. And yeah, we're there to support you in any way we can. So if that gives you a bit of peace of mind based to work out, what you are paying now and what it looks like you're going to be paying in the future, we're there to help you with that.